Good morning, good afternoon, good evening, depending on where you're connecting from. Welcome to today's weekly markets review and analysis session. I want to believe you had a great weekend and you're fully prepared for this new week. Please confirm you can hear me loud and clear. Confirm you can hear me loud and clear. YouTube, if you can hear me loud and clear, please confirm. Can you hear me? Can you hear me? Can you hear me? Drop a comment if you can hear me. Good evening, Mrs. Damilola. Good evening. Okay. Okay. So waiting for others to join. In the next 2 minutes, we'll start the class. If you have any question or any pair you want us to analyze together, let me know in the comment section. Let me know. Keep dropping your questions. If there's any pair you want me to analyze, let me know in the comments section. Any question you have, let me know in the comment section. Amandi, good evening. I think we have about 5, 6 persons in the class now, so we can start. Others would have to join us. Okay, give the video a thumbs up if you haven't done that. Once again, I want to welcome you to today's weekly market review and outlook session. So let's get started. You know how we do it. The first thing we do is to check the calendar for the week. That's the first thing you should do when you're analyzing the markets on weekends. Your pre-market analysis starts with the should start with the uh, with the calendar. Okay, a day trader, you should check the calendar every day to know the uh, when high impact news will be released. It's very important. Okay, so that your stop loss will not be used as liquidity. Okay, so I wish you all happy new month in advance. Happy new month in advance. I pray this month, the month of June, will be more profitable than the month of May. So more profitable. Okay, so tomorrow is Monday. This week, as you can see, we have several major news, high impact news that will be released from the different countries. On Monday by 3 p.m., the United States will be releasing its manufacturing PMI data, the high impact news. So you know Monday market is very unpredictable. Monday market most times is very unpredictable. So since there's a major news that will be released for the dollar tomorrow, you might have to wait for this news to be released before you take trade. I would advise you wait for this news to be released before you take any trade on dollar pairs. Okay. On Tuesday, Great Britain releasing its So the the governor of Bank of England will be speaking high impact news. And on Wednesday, 2:30 a.m., Australia will be releasing its gross domestic product data. Okay, and yeah, same Wednesday, Japan, the Bank of Japan governor will be speaking. And that same Wednesday, United States will be releasing its non-farm employment change and ISM services. Non-farm is by 1:15 p.m. and ISM services at 3 p.m. So that's it for Wednesday. Thursday, we have uh, Governor Bullock will be speaking. And by 4:40 p.m., Great Britain, Bank of England, Governor Billy will be speaking again. Right? Yeah. We'll be speaking on Tuesday and also we'll be speaking on Thursday. So if you expect high volatility on GDP, Australian dollar, USD, JPY pair this week. And Friday, we have unemployment rate, NFP. It's Friday. NFP will be released on Friday. And most times when NFP data is being expected, most times price would range on dollar pairs. On dollar pairs, we've experienced ranging markets on dollar pairs. There will be spikes trading dollar pairs this week, and the dollar pairs are the most volatile pairs. So you can't do without trading these pairs. So you just have to wait to get the right setup and conservative. That's what I would say. I wouldn't say you should avoid dollar pairs because that is where the money is. That is where the money is. Where there's volatility, there's opportunity to make money. So you have to be conservative. Okay? Go for quality setup. This week is not the week that you just be taking every setup. No, go for quality setup. If in previous weeks, let's say maybe 5, 10 trades in a week, this week you should just wait for quality setup trade. Don't overtrade this week. This week is not a week for you to overtrade. 2, 3 trades or maximum of 4 trade. Go for quality setup because we have a lot of major news so that you don't experience huge drawdown on your account. It's very important. That look at this now. The currencies that we don't have news this week. I think CHF. There's no news for CHF and there's no news for New Zealand. New Zealand CHF. I don't like trading those pairs. That would have been a good pair to trade since there is no news for New Zealand and no news for CHF. So for other how many major currency? Okay, Australia also there's a major news for Australia. So it's only New Zealand and CHF that there's no major news. Let me just see New Zealand and let me see New Zealand. That would be a good pair for some mind. Since there's no news for these two pairs. Let's see New Zealand. Wow, that is looking good. Wow. Mm. I might take it on New Zealand CHF since there's no major news for these two currencies. We'll come to this later. So we're done with the news for the week. So we can see. I'll come back to this New Zealand CHF. I think we'll have what I'm saying here. The opportunity to sell New Zealand CHF this week. Come back to this. Let's look at dollar index and then we'll look at forex index. Okay. Please confirm you all can hear me. Confirm you 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 can hear me, Mr. Sam. Maybe board. Confirm you can hear me. Confirm you can hear me. Okay. So let's look at DXY. So that would be weekly. If you look at DXY on a daily time frame, we could say that dollar has been ranging. Trading dollar this past few weeks has really been challenging. Okay, it's really been challenging because of the ongoing war, the ongoing conflict between Iran and Israel and America. So it's really been challenging. So if you have made profits this past few weeks, give yourself a thumbs up. You're doing well. Okay. I know you can see in the ranging market, you still made profits. Give yourself a thumbs up. You're doing well. You're doing well. Just imagine when the market becomes very trending, clear direction, you'll make more money. That your strategy will make you more money. Okay, so the market has been in a range, has been in a range. But let's start with the weekly time frame. Okay, so from what we see here from the weekly, please tell me what do you think is the trend on this weekly? I'd like to know in the comment. Drop it in the comments. What do you think is the trend? What do you think is the trend from what you see? Drop it. Drop it. I'd like to know your take on dollar index. What's your take? What's your take? What's your take? I'm waiting for your response. I'm waiting for your response. Just by looking at these charts, what do you think is the direction? Bullish or bearish? Bullish or bearish? I think in the next session we'll be having, I want one or two persons to join me live so that we analyze the market together. You join me live. I'll send the link to join me live so that we can be analyzing the market. I would like to hear your take. on the, the trend of the different pairs we'll be analyzing. I'm waiting for your response. If people are not responding, buy, buy. Okay, Mr. Sam says bearish. Navy Boy says buy. Okay, so Navy Boy, why are you why buy? Why buy? Why buy? Why are you bullish on the dollar? Looking at what we have on this weekly time frame. Okay, so what do we have here from what we have on the weekly time frame? My focus on the weekly time frame is the candlestick pattern. That's my focus. Okay, so if you look at the pattern we have on the weekly time frame, the past 2 weeks, you can see these are bearish reversal pattern. Right? These are bearish reversal pattern. So going by this pattern we have on the weekly time frame, it's bearish for me. It is bearish. I'm not looking at anything. The first thing I look at is the candlestick pattern before I look at maybe prices at premium or discount. First thing is the candlestick pattern. Candlestick pattern. So if you look at here, we had this looks like a spinning candle. Okay, a spinning candle. You could also call this an angry man. You could call this an angry man because the wick below it is 2 times the body. Now, a valid angry man is not supposed to have a wick above it, but these days it is very difficult to find a candle without a wick above it. Okay, so call this, you could call it a spinning top, you could call it angry man because the wick below is 2 times the body. Whether you call it spinning or you call it angry man, both candles indicate change in trend. Both candles indicate that the bullish momentum or the bearish momentum is becoming weaker. That's what it means. Whether it's angry man or it's spinning, both indicates change in trend. So we had this, and last week we had what looks like a shooting star. This is a shooting star candle, and that shooting star candle formed after they swept the liquidity of the previous week. Can you see that? So this tells me that for now the sellers are in control. A resistance has been created here. See, after the close of this bearish candlestick, we had this resistance. I would only consider buying if price breaks out from that resistance. I would only consider buying if price breaks out from that resistance. Okay, so I cannot buy when I'm seeing a reversal candlestick pattern. No, I can't go bullish until maybe price breaks out from this resistance. So going by what we have on the weekly, I'm looking for sell. Okay, I'm looking for sell. Also, if we apply our Fibonacci, now let's apply Fibonacci to know if price is at premium or discount. Let's take it from here. From that swing high to swing low. There is price now. Where is that rejection? The rejection. Where did price get to before we saw that retracement? You can see price pulled back to equilibrium. It even went above equilibrium to premium area. You can see. So price went to a premium area and there was a strong rejection from that. And also, if you look at this point here, this you can see here we had this fair value gap. This fair value gap could be the reason for this buy. So price had to pull back to come and fill. You see this gap? You can see it here. This fair value gap. That could be the reason for this retracement. And after the retracement, look at the candlestick pattern that formed. Now we had this relative equal low, which is a high level of liquidity. You see, this relative equal low is a high level of liquidity, area of liquidity. So there's a high probability they will come for these lows. There are a lot of stop orders residing at this low. So there's a high probability they're going to come for it. So I'm looking for sell. Okay, so that's it on the weekly time frame. Let's go down to daily time frame. Okay, let's go down to daily time frame. So on the daily, what do we have here? See what we had here on the daily time frame. Markets range from this point to this point. So a lot of retail traders will be entering sell, buy, sell, buy, sell, buy, sell, buy. Stop losses will be residing at this high. Stop losses will be residing at this low. So what they did Thursday, Friday, first thing they did was to go sweep all the stop losses residing at this high. Then on Friday, they came to sweep the stop losses residing at this low. Now below this low, we have this fair value gap that has not been filled. Those are my target for this week for the dollar. I would only consider buying if price breaks out from this resistance. So this is my resistance zone. Let me go down to 4 hour. Okay, so this is the zone I would love to see price break out from before I will consider buying. So this will be my invalidation zone. You see this resistance area, we will call it your supply area. This is my invalidation zone. So if I decide to sell the dollar, anytime dollar crosses this resistance, a candle, let's say 4 hour, close above this resistance, all my trade on the currency pairs, dollar pairs, I would close them. I would close them. Let's assume I don't even use stop loss on my trade. If I don't use stop loss on my trade, all I will be looking out for is a breakout from this resistance. Once price breaks out from this resistance, it tells me that demand is higher than supply. Okay, this is a supply level. So if demand right now, we can see demand is the bullish momentum is increasing. You can see so demand is increasing. So if demand is able to break out from this supply area, that tells me demand is higher than supply. And when demand is higher than supply, I want to look for more buys. I want to look for more buys. So this is where a breakout from this zone is where I'll be considering looking for buy. But at the moment, it's a sell for me. Now, before you sell, you can see we had a doji, we had a spinning candle, then we have an engulfing candle, and a fair value gap was created. A fair value gap was created. So there is a high probability they would want to come fill this fair value gap. Why? Because of this high. Because of this high, the high of this candle. Because of this high. You see, they intentionally did not fill this fair value gap. So after the formation of this candle, you see we had a support here. Now after the formation of this candle, this is a shooting star candle. Most retail traders will start selling. And this candle now engulf, broke out from this support. Those who trade breakout strategy, they would sell. Are you seeing it? So this high now is a high level of liquidity. There are a lot of stop losses residing, and they would also want to come and fill this value gap. So their first targets. So before I would look for sell for dollar this week, I want to ensure if they don't sweep this high, I'm not going to sell dollar. If this high, this liquidity here, if not swept, I'm not going to sell dollar. I would not sell dollar until this high. Until this high. So my high is on DXY charts. Once this high is cleared, that's when I will now be looking for sell opportunity. So you can even see on Friday, look at how this candle closed. This is a bullish candle. It's a bullish candle, and it's an hammer, which indicates change in trend from bearish to bullish. So I want them to push price up, sweep this liquidity. If they don't sweep this liquidity, if they like, they should sweep this low. I will not sell. Price needs to pull back to this level. That is where I will consider taking a sell. So my bias for dollar this week is bearish. Okay, it is bearish. But if a candle breaks out from this resistance, then my bias has been invalidated. But I'm not interested in buying dollar this week. Even if it breaks out from this high, I'm not interested in buying dollar this week. I'm going for sell this week on the dollar. I hope that is clear. So let's look at yen. Thank God for a good network. Thank God for a good network. Okay, so yen, I told you last week my bias for yen is bullish, but yen last week did some wonders. It was just selling, doing the opposite. Doing the opposite. I also mentioned that there's possibility for them to sweep this liquidity. I mentioned it that there's possibility for them to sweep the liquidity, and I think they achieved that last week. Let's start with the weekly time frame. So, okay, so I think what I identified last week. So we saw this sell here. I said, if you go down to daily, I said, okay, so you see this support here. I identified, if you remember, I identified this area last week. I said if price breaks out from this support here, this area, then most likely they will come and fill this test this resistance, or resistance non support. So you can see price pulled back, and you can see this zone. You can see. So this is acting as a support right now. This is acting as a support. So I'm looking for opportunity to buy yen this week. Okay, but I still need to wait for confirmation. You can see on Friday candle close bearish. It closed bearish. If Monday candle closes bullish, that will be a strong confirmation for bullish yen. That would be a strong confirmation for bullish if Monday candle closes bullish. Now, if you want to trade tomorrow, if you don't want to wait for Monday candle to close, like I said, the strong confirmation will be to wait for Monday candle to close. But if you don't want to wait for Monday candle to close, then let's see what we have on 4-hour and 1-hour time frame. Let's see the pattern we have on 4-hour and 1-hour time frame. Good. So this is what we have on 1 hour. So the swap liquidity residing at this low. The swap liquidity residing at this low. And if you look at the pattern we have here, this last candle closed as an hammer. It's like yen is set for buy. It's like yen is set for buy, going by what we. But let's see 1 hour. Okay. So we had a ranging market here. So so they might still want to sweep this liquidity because a lot of retail traders now would have entered back. We had inverted hammer here. We had this candle looks like an engulfing. Looks like an engulfing. So most people would have bought based on this pattern. Then we had a resistance here. You can see this little resistance here. This candle broke out from that resistance. Those who trade breakout would buy. They will see this as a breakout. Since the body of this candle closed above this high, they will see it as a buy. So a lot of people would have bought and their stop losses will be residing at this. So I think I would want to see one more sweep on yen basket before going bullish. Okay, I want to see one more sweep on yen basket. You can see here we had that hammer, but if you look at what we have here, price went up, came back to discounts. So it might not really come back to sweep this liquidity, right? If you apply a Fibonacci from this low to this high, it has already done over 50% retracement. Continue, so maybe it will do a 50% retracement again. Okay, so in London session, if I see opportunity, if price pulls back probably to this discount here, okay, this discount, I will look for my buy opportunity. But if price breaks out from this discount area, then most likely they are going for liquidity. Then I would have to wait for price for them to sweep the liquidity before I will buy. So this is the first level. The candlestick pattern that forms here will determine if I will buy from that zone. Okay, but if price breaks out from that zone, then they are coming for this liquidity. They are coming for this liquidity. Now, if price breaks out from that zone, price could reverse immediately and close above that zone. So I could buy. Are you getting me? I hope you're getting me. If price comes into this zone, it could break out and immediately reverse. So if it breaks out, I'll wait for the next candle to close. If the next candle closes above, then it's possible that they might not come to sweep liquidity. Okay, so that will be a false breakout from that zone. That will be a false breakout. Okay, so I'm bullish on yen. I am bullish on yen this week. I'm bullish on yen this week. Okay. Mrs. Amlola says the structure. You mean for yen basket, for dollar? Is it for dollar? Let me know. The structure is bullish. Is it for dollar? Let me see DXY. Let me see the structure. I want to believe you're referring to dollar. Let's see the structure on the dollar. Let me start from the daily time. Structure is. Let me see. Someone said the structure is bullish. Let's confirm. Is the structure bullish? I don't think it's bullish. Doesn't look bullish. Let me go to the weekly. Okay, we were supposed to look at the monthly time frame. The month just ended also. We're supposed to look at the month. No. Based on what we have here, this is a bearish. We go by what we have here. It's a bearish structure. From this point, it's a bearish structure. We go by this. It's a bearish structure. Let me. From this, it's a bearish structure, not bullish. It's a bearish structure. If we go by this, it's still bearish. It's still bearish. After this massive drop, how you will know it's bearish? After this massive sell, you will see that the buyers have been having difficulty. They've been struggling to push price back up. There's no aggressive move to the upside. That's to tell you that the bullish momentum is still very weak. It's still very weak. That's what it's telling me. After this aggressive move. We've not seen an aggressive buy to the upside. You can see buyers will come in, sellers will come in, buyers come in, sellers, you know, buyers, so the buyers are not ready to push price up. That's what I can read from these patterns we have here, or this candlestick pattern. After this aggressive, more aggressive pullback, you can see. So it's bearish for me. It's bearish. It is bearish. Dollar most likely after sweeping this liquidity, after sweeping this low, might go for this low. It might go for this low. But this will be my target for this week. Unless maybe major news is released. Technically, dollar should be bearish. Technically. The only thing that will make dollar buy will be maybe fundamentals. Or Trump gives a speech or tweets something that will make people invest in the dollar, make people buy dollar. That's the only thing. But technically, dollar should be bearish this week. Dollar should be bearish this week. It should be bearish. Okay, so let's move on to currency pairs. If there's any pair you want me to analyze, let me know in the comment section. Let me know in the comment section. GBP/USD. Okay. So if you look at GBP/USD also, after the massive move on GBP/USD, see after this massive move, price went into a range. You can see price went into a range. Can you see that? It went to a range, and so yeah, those trade shifting market structure. Yeah, you see there is shifting market structure. We had a high, we had a low, shifting market structure. Price has pulled back to a premium area retracement. Now, if we apply this the most recent swing low, swing high, where is price right now? Okay, so you can say price pulled back to discount, right? And at the discount, you see the reason why price came back here. This sell, you see the reason. I think it was to fill. You can see this fair value gap. This is a fair value gap. This could be the reason for the sell. And after price filled that fair value gap, you see the strong rejection from that. And we also had a breaker here. And you see this, yeah, this is a breaker block. We have a breaker here. We have equal quality resistance, down support. You can see there was a strong rejection from that zone. You can see that. So now let's go down to lower time frame. Like I said, we're supposed to start with the monthly time frame. So you can see the monthly time frame. So price has been ranging for some months now. For some months, but last month. So let's start with the monthly time frame. So we had this engulfing candle. You can see it on the monthly time frame. You can see it on the monthly time frame. You can also see on the monthly time frame. We had this gap on the monthly time frame. Can you see that? Price pulled back. If you also apply your Fibonacci on the monthly time frame from this swing low, see from this swing low to this swing high, you can see why price had to pull back to discounts. Can you see that? Price pulled back to a discount, filled this fair value gap. This is the reason for this retracement, filled this fair value gap. And after filling that fair value gap, we had an engulfing pattern. And what happened again? After the formation of the engulfing, if you put your Fibonacci from the low of this, that's for the month of, I think, April, puts your Fibonacci from the swing high, the high and the low of that candle. You can see price has also pulled back to discount of the previous month. You can see it has pulled back to the discount. And from that discount, strong rejection, go to weekly. Strong rejection from the, you can see, pull back to the discount. And strong rejection from that discount. So there's a probability that GBP/USD will be bullish this week. But before you buy, I would advise let's wait for reversal. Okay. If I will take any buy on GBP/USD this low, just the same way I'm expecting a high on dollar index to be swept, I want to see this low. A lot of stop loss here. This is an hammer. Most retail traders would have bought. most retail traders would have bought, and their stop losses will be residing at this low. So I would love to see them sweep this low. If you go down to lower time frame, I believe we have a fair value gap. Okay, so you can see here. So we have this fair value gap. So if they're able to sweep that low, there is a high probability that they will come fill this gap. So these are the areas I will be looking for my bullish reversal pattern to form for me to buy GBP USD. The dollar must sweep the high, then GBP USD must sweep the low. Those things must happen before I will look for buy on GBP USD. I hope that is clear. I hope that is clear. If there's any pair you want me to analyze, please let me know in the comment section. Please give the video a thumbs up if you haven't done that. And if it's your first time joining the live stream, please do subscribe to the channel so that every time I come on live, you'll get notified by YouTube. You don't want to miss any of the session. You don't want to miss it. So please subscribe to the channel. Okay, so let's move on. Which other pair do you want me to analyze? Let me know in the comment section which other pair do you want me to analyze. Euro USD, similar pattern with GBP USD. Okay, similar pattern. So let's start with the monthly. It's very important that you look at the monthly time frame. Starting the new month, you need to look at the monthly time frame. Okay, so what do we have here on the monthly time frame? We had bearish, bullish, price came, swept liquidity residing at this low. Okay, so let's see weekly. Okay, so on the weekly we have this is an inverted hammer. The next candle close bullish. That's a buy setup for me. Okay, that's a buy setup. And the reason for that, let's see, we had this resistance turn support. We also had this support. Yeah. Okay, so price can test it. So now a lot of retail traders have executed buy, right? They would have executed buy and their stop loss is residing at this low. So on Euro USD, I would love to see them sweep this low before going bullish. On Euro USD, I would love to see this low. So you can see we had an hammer. So a lot of stop losses residing at these lows. And below this low, you can see there's a fair value gap that has not been filled completely. I think that was an intentional move. That was an intentional move to get retail traders to start buying. That was an intentional move. So I think stop losses are resetting at this low. So they're going to sweep this low. I want to see them sweep that low. They don't sweep that low. I'm not interested in buying Euro USD. So we also have this imbalance here. So this gap, I would love to see them fill this gap before going bullish. Now they might not come to fill this gap because you can see we had a lot of resistance on support here. You can see this could hold price too. This is like a mitigation block. This is mitigation. So this block might not make it possible for them to come and fill this gap. Yeah, that's the reason we saw this rejection. Okay, so on 4 hour after the pattern here, let's see on 4 hour. Let's see what we have on 4 hour. Okay, so if you don't go for those lows, then I want them to sweep this low at least. This low should be swept. So I'm going to work with this swing low, swing high, swing low, swing high. That's what I'm going to work with. Okay, so I want them to come pull back. Price should pull back to a discount area. Now, if price breaks out from the discounts, I know they'll be going for the liquidity. So I'll patiently wait for them to sweep the liquidity. If a bullish reversal pattern does not form after they sweep this liquidity, then they're most likely going for this low. Then I'll patiently wait for that to happen before I will take a buy on Euro USD. Okay, but I would have loved to sell Euro USD down, but the risk reward doesn't make sense. So I'm not interested in selling, and that's a counter trade. I don't want to do that this week because we have major news that will be released. I don't want to counter trade. I don't want to trade against the trend. So I just want to flow with a higher time frame. The monthly and the weekly is giving me buy. So I think it's best to just flow with the trend. Okay, so that's the reason I would have said, okay, let's just sell Okay, since it's coming down to discount, let's say to discount, man, it's much from 1.662 1.162 to 1. Let's say 1.6. That's about 50 pips. 50 pips. I might still take a sell, but I need to just be sure my setup is there. I might still take a sell. I might trade the pullback, but if I'm going to trade the pullback, I'm going to risk less. Okay, I'm going to risk less. So if I'm supposed to take $50 risk on every trade I execute, I'm going to risk maybe just $10 or $20 because it's a pullback. I'm trading against the trend, so I don't want to take more risk on that because the probability of the market going in that direction is slim. I hope you're getting me. So that's what I do when I'm trading reversals or trading against the trend of the market. I reduce my risk. I reduce my risk on the trade. So I might sell tomorrow. I might sell Euro USD tomorrow based on what I'm seeing here. Price should come back to discount. I might sell. I'm going to take very low risk. Very low risk. Okay? Very low risk. Which other pair do you want me to analyze? Gold. We cannot end today's meeting without analyzing gold. I know most of you here, your preferred instrument is gold. GU analysis is not clear. What is not clear, Mr. Lawal? What is it you didn't get? What is it you didn't get on GU? What is it you didn't get? Was it that you couldn't see my screen clearly, or? Okay, so let's move on to the next pair. Which pair do you want me to analyze? Okay, let's look at gold. Gold lovers. Gold lovers. Gold lovers. Gold lovers. Gold lovers. Okay. So let's start with the monthly time frame since the month just ended. Okay. So going by what we have on the monthly time frame, this looks bearish on the monthly time frame. It looks bearish on the monthly time frame. But let's confirm something. I think this retracement probably we had a resistance which became a support, and this could be a breakout and retest. Let's just confirm at this point. We're most likely going to identify a resistance to support around this area on the lower time frame. That could be the reason for the retracement. Let's just confirm. Okay, let's confirm. So price pulled back to, let's go to weekly to see. Okay, so you can see what we have here on the weekly time frame. I said it will be able to identify resistance, turn support. You can see price pulled back to retest this resistance, turn support, and there was a strong rejection from that point. Okay, so this could just be continuation. Okay, this could just be continuation. Okay, so retest, hammer candle formed. So after the formation of this candle, let's see. Most likely we had a fair value gap in a lower time frame. Let's say on a daily time frame. Okay, here's the vertical line. Okay, here's the vertical line on daily. It shouldn't be this far now. Can you all still hear me? Can you all still hear me? Can you all still hear me? Okay, so this is daily. The vertical line is supposed to be here. I guess the network is not. Yeah, so the vertical line is supposed to be here. So if you apply our Fibonacci on this from this swing low to this swing high, okay, from that swing low to this swing high, so you can see that price has already pulled back to a discount, right? It's below 50. And hammer candle formed after it's pulled back to discount. Okay, so good. Okay, so it has pulled back to discount. Let's see if there's a fair value gap below that. It might want to, let's see for our okay, Okay, so yeah, how I think the direction is clear on 4 hour time frame. So we had this rally. Okay, so and it created this gap. So I am bullish on gold and I want to see it pull back to this. You can't buy now, right? You can't buy. This is where you should have bought after the formation of this candle. This is where you should have bought. So if you didn't buy it, I see no reason why you want to buy from this point. I see no reason why you want to buy from this point. And you can see here that the swept liquidity residing. This buy here was to come and sweep the highs here. I think okay, they've not okay, they've taken this high now. Yeah. So this buy, all this buy here is to come and take all your stop losses. Okay, that was what they did. They came to sweep all the stop losses residing at this high. Now they've swept all the stop losses. Okay, they will price to pull back. They would want price to pull back. When at the time they bought at the time they bought the decision bought from this point, they won't go all in. So let's say they want to trade gold, they want to invest $10 million on gold. They will not execute all their trade. They won't inject all the funds into the market. So what they will do here, they might just go in with 3 million. 3 million they will buy, push price up. Now the remaining 7 million, they want price to retrace back. They definitely will not want to buy or inject uh, more money into the market at this point because to them also it's very high. So they want to also make price retrace back, right? They want to see price retrace back. Okay, probably they will sell so that price will drop. So once price drop, they will now inject the remaining the balance 7 million. That's so they will not want to buy from this point. They've swept liquidity here. Let's take it down again. Okay, let's take it down. Then they will buy. Probably once they sweep this low here, they will buy. Then push it down again, buy. That's so gold is buy as far as what I'm seeing on 4 hour time frame. It's more clear on the 4 hour time frame. When I looked at the monthly, it wasn't that clear. I looked at the weekly. Okay, the price on the weekly time frame was put back to a support area, which is like a break and retest, like I said. Okay, then went to daily. Okay, daily say you can see price was in the range on the daily time, but going down to 4 hour time frame, it was more clearer on the 4 hour time. It was more clearer on the 4 hour time. So I want to see price pull back into this zone, First, this liquidity, yeah, because we have a breakout here. There was a breakout from a resistance, and most retail traders will buy. We also had a doji. Then this breakout, this candlestick broke out from this resistance. So most retail traders will do what? Most retail traders will buy because there was a breakout. Stop loss is this one. They are definitely going to come for this. They are coming for this. And if they sweep this, they're going to come for this, most likely. So if I want to take any risk on gold, price should at least come take this low. It should come take this low before I would look for my bullish reversal pattern for gold. So my bias will go stay. But if you want to risk selling, you can sell because they've swept liquidity and the pattern we have here looks bearish. If you look at 1 hour, I'm sure there are bearish reversal pattern that has formed on 1 hour. You can see bearish reversal pattern that are formed. So those who trade 1 hour time frame, those who are just focused on 1 hour time frame, based on the pattern we have here, most of them would have executed sell. So there's a probability that price would pull back before going bullish. Okay, so that's my position on gold this week. Okay. So which other pair do you want me to analyze? Let's look at GJ, which will be the last pair for tonight's session. If there are no questions or if there's any other pair you want me to analyze, let's look at GJ. Let's look at GJ. But we have news for GJ. This both Great Britain and GJ and JPY. We have major news. When the governors of this bank are speaking, then they one needs to be very careful. Trading GBP, Bank of England, that will be speaking. Yeah, and also Japan, Bank of Japan governor also will be speaking. That's Tuesday, Wednesday. So I think if you want to trade, then on Thursday, I wanted to say Tuesday, Wednesday after this speech, you could consider trading the bond. On Thursday, the Bank of England governor will be speaking again. You see, he will be speaking again. So just be conservative this week. I wouldn't say you shouldn't trade, but be conservative. Okay, go for quality setup. Don't over trade this week. Just go for quality setup. This week, 4 trade maximum. Don't 4 trades. My plan this week is just maybe 3 trades. 3 trades, maximum 4 trades. 4 trade. If I execute in that 3 trades, if my first 2 trade, if I hit stop loss on the first 2 trade, I'm going to reduce my risk on the third trade. Okay, so if I'm risking $50 on each trade, if I lose $100, the third trade I'm going to reduce it to 20, maybe $25 or $30. I'm going to reduce my risk. So if I risk that $30 and I make maybe $60, at least I've recovered some of the losses I've made. So that's the plan for this week. I'm looking at executing 3 trades. First 2 trade, if it's hit stop loss, I'll go in on the third one, but my risk will be less. If the first trade is winning, second trade is a loss. The third trade I'll see is the same risk, which will be that $50 on the third trade. If that one hits stop loss, that will be it for the week. That will be it for the week. So this week I'm not looking to take too many trades. Too many trades. I'm myself not to trade tomorrow, Monday. I will try my best not to trade tomorrow. I'll try my best. So Tuesday, Wednesday, Thursday, that was when I'll be looking for opportunities to trade. I'll try my best. But it's very difficult for me not to trade on Monday. I've told myself several times I want to avoid Monday market, but I mean it's very difficult. It's very difficult. So I'm advising myself and I will try not to trade. You know, tomorrow I will try. But if I see my setup, I'm going to execute the trade. I won't lie to you. I'm going to execute. If I see a very good setup, I would execute the trade. It's either stop loss or take profit. That's just it. That's just the game. If I see my setup, I always want to execute because I'll feel so bad if I didn't execute the trade and the trade goes in my favor. I will feel so bad. I'll feel so bad. So I'd rather execute the trade, probably risk less. If it goes against me, fine. Fine, but I always want to stick to my trading rules. Execute my strategy anytime it forms. Whether there's a fundamental or not, I will execute it. If the news is expected, I'll just reduce my risk. That's just it. So if the news take me out the first time, the little balance that is left to risk on that trade, I will execute it if I see my setup after the news. That's just how I trade. Okay, so myself should look at GJ. Let's start with the monthly. Okay, so monthly, last month was bullish. They swept liquidity residing at this relative equal high last month. That is the reason for the buy for last month. Okay, that's the month of April. They had to come and take this high. You see the pattern we have here. These are bearish reversal pattern. Most retail traders would have executed sell after this shooting star and spinning. Where would they have their stop loss? Stop loss will be residing at this high. That is where the institutions want to buy, where there are a lot of sell orders. Okay, there are a lot of, no, these are buy. Yeah, these are buy orders. They want to sell. And for them to sell, they will have to look for people who are willing to buy. They have to look for where there are a lot of buy orders. Okay, they have to look for where there are a lot of buy orders, and the buy orders are residing at this high. Remember your stop loss when you place a sell order, your stop loss is a buy order. When you place a sell order, your stop loss is a buy order. And when you place a buy order, your stop loss is a sell order. Okay, so yeah, there are a lot of buy orders here. A lot of buy orders here. Okay, so this is where they were going to sell. So last month they swept that high. Okay, then go down to weekly. Okay, that was also played out. Now on the weekly time frame, we had, after they swept this liquidity here, we had this shooting star, then the next candle. Remember, when you're trading candlestick pattern, these patterns indicate changing trend from bullish to bearish. Okay, this is a shooting star, and because the body of the shooting star is bullish, you don't just execute the trade, right? You don't just execute the trade. Most people that execute the trade and their stop loss, that's why they have to go for their stop losses. The impatient traders would have jumped in and start selling after the formation of this bullish candle. And I've always said, when the candles that are printing on your chart are bullish candle, it does not make sense for you to sell. Before you sell, you must see bearish candle. You must see a bearish candle. You cannot be seeing bullish candles that are printing on your chart are bullish, and you're telling me you want to sell. Why do you want to sell? Because 1 minute or 1 second time frame is telling you to sell. You will lose money. Your stop loss will be used as liquidity. Your stop loss would be used as liquidity. Okay? So that's why I'm always against trading those lower time frame, 1 minute, 5 minute time frame. No. Time frame are not time frame you should be trading. You are trading those time frame, your stop loss most times is the liquidity. It is the liquidity. So that was what they did here. So when you see this pattern like this, is a bullish shooting star, you have to wait for the next candle to close bearish. Now, the candle that followed it close bullish, that tells you that the sellers are not set. We don't have enough sellers in the market to push price down, right? So you have to wait for the next candle to close bearish. So this is weekly time frame. This is higher time frame. We have a bearish reversal pattern on the higher time frame. Can you see that? You can also apply this on 4-hour time frame, daily time frame, 1 hour time frame. It will play out. But now it's forming on a higher time frame. That's to tell you that the trend long term is bearish. Yes, you can still see buys on lower time frame, just as we have them here. You will still see buys on the lower time frame, but the higher time frame is set for sell. Okay, so on the weekly time frame, I'm going to analyze using the weekly time frame. All I need to do is just apply my Fibonacci. This is swing high, this is swing low. I can just apply my Fibonacci from that swing high to this swing low. And where is price now? Where is price now? Price is at premium, right? Price is at premium now. So I should be looking for sell. Price is at premium. I cannot. No, let's look at the chart together now. Why should I buy from here? Where did the buy start from? Where did the buy start from? The buy started from this point. Let me go to lower time frame so that you see this is where you should have bought. Let's go to 4 hour. Let's go to 4 hour. This is where you should have bought. I'm shocked. Some people, I told you, if the market has moved in one direction, 100 pips, you should not be the one buying or selling from that point. I don't know why people still go and buy when the market has done over 100 pips. I don't understand. I don't understand. So you see all the pattern we have here on a 4 hour time frame. You see, this is where the market started from. This is where, okay, let's say we do buy after this, what's it called? This reversal pattern, because we could say at this point, price just range, right? So the best time to have bought would have been after price broke out from this resistance area. So this breakout, that is where you should have bought. Now, if you didn't buy from here, tell me why? Why? You don't need indicators to show you these things. You have indicators that will tell you market is overbought or over. So you don't need indicators. Just by looking at the candlesticks, looking at where price started going up, you know that this is where I should have bought. So why would you want to buy here? If you're a business person, they told you this laptop was sold $500 last week. This week is selling for 1,000, and you know you have to resell that laptop. Would you buy that laptop at 1,000? You will not buy it at 1,000 now. You will not buy it because you were told that it was sold for $500 last week. If you buy it at 1,000 and the price drops, you're going to lose. You're going to lose. So if I thought you want to take a risk, at least you want to wait for price to do a 50% retracement of this move. If at all. So if you 50 retracement from this point. Yes. Okay, go. All right. Sorry for that break. So at least you should wait for price. So if it was sold for 500 and now 1,000, at least you should let price pull back to, let's say, 750. If it pulls back to 750 and you buy from that point and price drops again from that 750 to 500, you just lose 250. It's better to lose 250 than for you to now buy at 1,000 and the price goes back to 500. It's better to lose 250 than for you to lose 500. This thing is simple. We just try to complicate things for ourselves. It's very simple. And I think the reason most people jump in and start buying FOMO, fear of missing out. You've already missed out on that move. Any market that has done 100 pips, you shouldn't be in that trade. You should wait for at least 50%. If you just keep doing this, you will be a profitable trader. You don't need any indicator, just candlestick pattern and Fibonacci 2. You will be profitable. You don't need any indicator. You don't need any complex strategy. Just look at where price started going up or down, and where it is. Calculate the difference, the range. Is it more than 100 pips? Is it more than 80 pips? That's for currency pairs. For gold, if it is more than 300, 400 pips, you should not be taking that trade. Wait for at least 50% retracement before you consider taking that trade. This thing is simple. It's simple. Well, you see people, traders moved 100 pips, they are taking buy. Traders moved 100 pips on down or sell, you are still taking sell. Your stop loss, you want to use stop loss of 100 pips. If you are using stop loss of 100 pips, what will now be your take profit? 200 or 300 pips. How long will it take for the market to give you 300 pips? It will take months. And I know most of you don't have the patience to hold trades for months. So wait for that retracement. Do that and you see improvements. You see that at least you're making profits in the market just by doing that. Don't jump in when the market has moved in one direction, 100 pips. Wait for at least. Just apply your Fibonacci. This is the high. This is the low of this move. I want to wait for price to 50% minimum, 50% retracement. So you can see that price on a 4-hour time frame is at premium. Is it on daily time frame? Okay, let's say daily time frame. So this is daily time frame. So you can see what they did here. Okay, I love what I'm seeing on the daily time frame. So we had this engulfing candle break out from this. So this could also be after price broke out from this support. Price tested that level several times and there was a breakout. Most retail traders will start buying. Yes, most retail traders will start buying because there was a breakout. There was a breakout. So most retail traders would have bought. And you can see the pattern we have here, doji. After the formation of this doji also, most retail traders would have bought. And where would they have their stop loss? Their stop loss will be residing at this low. And below this low, we still have this relative equal low. And we still have this imbalance as on the field, which are possible areas for GBGPY. Also these lows here, levels of liquidity. Now we also still have this high here. So it's likely it's this week, it's either price comes to fill this gap or price comes to sweep the liquidity, sell-side liquidity. That's what's going to play out this week. That is what's going to play out this week on GJ. It's either price comes to fill this gap. So if I want to buy, a resistance has been created here last week. This was last week. Yeah, we're on daily time frame. This was last week resistance. This was last week resistance. I would only consider buying if price breaks out from this resistance. You can see that markets tested this resistance last week, last Friday, and there was a strong rejection. Okay, so if a candle breaks out from this resistance, then I might want to risk buying. But as it is right now, the market is still trading below this resistance. That is a sell for me. That is a sell for me. And if you go on a 4-hour time frame, what do we have here? We had this high. Apply a Fibonacci from this swing high to this swing low. Now, if you look at it from this point, this is 214.68. Can you see that? 214.68, and price pulled back to 213.35 from 214.68 to 213. So that's above 100 pips. Can you see that? That's above 100 pips, right? From 214.68 to 213, that's above 100 pips. And after that move, some people will now start selling from this point. And what happened? Those who sold from this point, now you see what happened? Price pulled back. You see, price did what? Pulled back to premium. So there's likely that to sell from that point. Hey. I'm coming, I'm coming. It's been playing with water inside that. It's, oh, sorry for that break. So, so this is a sell for me. Now, this high here is still a level of liquidity they might want to sweep because most retail traders would have executed sell. Most retail traders have executed sell, and their stop loss is resized, so they might still want to sweep. You know, see on 1 hour we have a spiny candle, engulfing candle. Price, if you apply a Fibonacci from this high to this low, price has put back to came back to fill this fair value gap. Okay, so price went back to fill fair value gap, put back to a premium area. Okay, so but I would love to see a retracement before I would consider taking a sell. You see this gap here? This is where I'll be considering looking for sell. Okay, this is where I'll be considering. Now, if a candle breaks out from this zone, if a candle breaks out from this zone, then most likely they are coming for this high. So it is the candlestick pattern that forms and the market has opened gap. You can see the gap. You can see the gap. And that gap, the target was this fair value gap. Can you see the gap? You can see it was why this fair value gap. Why this fair value gap? You can see. So when ICT says this market is run by algorithms, I think he's right. He's right. You see, they had to pull back. So if a bearish reversal pattern forms after they fill this gap, I'm going to start selling GJ. I will start selling GJ if a bearish reversal pattern forms after this gap gets big. But if a bullish candle breaks out from this zone, then most likely they will go for more liquidity before they will sell. I hope that is clear. So that's my take on GJ. I'm looking for opportunity to sell GJ this week. I can't be the one to buy from this point. Never. Never, 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 never. I cannot buy from that point. There has to be a retracement. There has to be a retracement. Any question? Any question? I think that will be all for tonight's session. Do you have any question? 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 I think I've analyzed all the pairs you requested for. I think I've analyzed all the pairs. Any question? Any question? I'm very hopeful that this week will be a great week, despite the several major news that will be released. I believe it's going to be profitable. I believe it's going to be profitable. Just have to stick to your trading rules, apply proper risk and money management. Please don't over leverage. Don't over leverage. The rate at which people keep losing in this market, it gives me a lot of concern. It gives me a lot of concern. People are just losing money anyhow. I'd rather lose $1,000 in 6 weeks than lose it in 1 week. Because in that 6 weeks, I would have gained a lot of experience. I would learn a lot of things. You can't learn anything in 1 week, blowing $1,000. You cannot learn anything. And if you blow $1,000 in 1 week, there's a high probability that when you refund, you are coming back to revenge, to attack the market, to revenge, and you will keep losing. Why are people still losing in the market? It is because they want to recover the money they have lost within a short period of time. That is why many people keep losing in the market. You start with the $1,000, you lose the $1,000 in 1 week. Most people won't refund with the $1,000. Probably they will reduce to maybe 500. It means you have to double the risk on 500 for you to even break even and recover your 1,000. It's better to start small and increase the lot size as your account increases. Start small. Don't despise little beginnings. No, start small. If you start big, you will be forced to that stage, that phase that you want to jump. You will be forced to go back to that phase. You will be forced. So you start with $1,000. You started trading with 0.1 lot size. You blow the account. You now fund $500. You still want to trade with 0.1. You cannot trade with 0.1. That lot size that you avoided trading on the 1,000, that's micro lots that you're supposed to trade on 1,000 that you don't trade. You'll be forced to trade on that $100. And when you now start trading micro lots on that $500, do you know how long it will take for you to make back the $1,000 you have lost? So your focus should be to preserve your capital. Your focus should be capital preservation. Warren Buffett, the best investor, one of the best investors in the whole world, gave 2 rules of investment. The first rule is preserve your capital. The second rule is remember the first rule. That is the rule of this game trading. That is the rule. Your capital preservation. That should be your focus. Focus on being consistent. When you are consistent, when you are making profit, you now think of how can I increase my capital. Your $100 cannot make you a millionaire in this business. It's not $100. Your $100 is too small to make you a millionaire. It's too small. You need good capital to make good return, good money in this market. You need good capital. But that $100, be consistent. Make good profit on that $100. When you make good profit on that $100, then you now think, okay, if I'm making 10% on a monthly basis on $100, which is $10, what if I have $1,000 on my account and I'm making that same 10%? That is $100. What if I have $10,000 and I'm making 10%? $1,000. If you are making $1,000 consistently, you are in Nigeria and you are making $1,000 consistently, you are a big boy. You are doing well. So don't try to flip your $100 to $1,000 in 1 week. It won't happen. It won't happen. All those things you see on social media, Instagram, it is the one that worked out that they will show you. They are not showing you the number of times they've lost that $100. They might have lost 10 times and this one time worked for them. That is what you are seeing on Instagram, TikTok. It is not the reality of this market. It is not the reality. So focus on being consistent. Focus on being consistent. When the time comes for you to scale, you will scale. And to get $1,000 when you are consistent is not a difficult thing. To get $10,000 is not a difficult thing. There are people who want to invest in you. They want to know, okay, are you consistent? No serious investor will invest on someone that is flipping. No serious investor. That's why you even see all those influencers. No serious investor will give their money to them. Serious investors are looking for people who are consistent, who will consistently make, even though it's 2% every month, they would rather invest in that person than someone that will take a risk of 50% or 100% of their account. So focus on being consistent. Focus on being consistent. So I want to appreciate every one of you for your participation. Mrs. Damilola, Amandi, Mr. Sam, Mr. Gani, who else again? Mr. Anayo, Gabby. Yeah, I think that's the people I can see. Their name, then Mr. Osuji, Mr. Darlington, you joined late. The replay will be available. You can always watch the replay at your convenient time. Okay, so I want to appreciate you all once more for your participation. Okay, someone requested for New Zealand USD. I've analyzed Euro USD, GBP USD. Is the same thing. The pattern is the same. Okay, if I'm bullish on GBP USD, Euro USD, you expect me to buy. But let's just look at the chart. Okay, New Zealand USD. New Zealand USD. Let's just look at the chart and we end it. So New Zealand USD, see the gap on New Zealand USD. See the gap on New Zealand USD. Okay, so New Zealand USD. Okay, so breakout. Okay, so if you apply your Fibonacci, okay, let's start with the monthlies. So on the monthly, What do I want to do here? I want to apply my Fibonacci from this swing high to this swing low. Price is at premium now, right? I cannot buy. I will not be the one to buy from here. Never, never. Look at where the buy started from. 5732, and the market is at 5972. That's about 240 people. I can never be the one to buy from this point. Though the market is, because if you look at what we have here from this swing low to swing high, price pulled back to a discount area. That's the reason for the buy. I cannot be the one to buy from this point. So let's go down to weekly. If I will buy, I want to see, okay, I want to see a retracement. There should be a retracement. So on weekly also, price has pulled back to a premium. So we have the swing low and we have the high of last week. So there should be at least 50% retracement. That is only when I want to engage. Okay, let me take it from this point. You know I'm taking it from this point and not this low. Okay, you know I'm taking it from this. You know I'm taking it from this. You know I'm not considering this low here. Okay, I'm taking it from this point. Now what played out? I think the swept liquidity reset at this low. And if I'm to apply my Fibonacci, I'm going to take it from this. I'm going to work with this here. I'm going to take it from this high, from this low to this high. And you can see it has already done 50% retracement. It came back after price went up to this level. It came back to a discount area. You can see a strong discount, extreme discount before it's continued. Price broke out, and you can see it has already retested that area, and there was a strong rejection from that area. So, and it's created a fair value gap here. So at least I would love to see price pull back to this zone. I think that should be up to 50% retracement. Let's confirm. Let me apply. So I'm going to take it from this low, since they've done this retracement here. So I'm going to take it. So okay, so at least price should pull back to this zone. That is 5914. That's about 60 pips from the current market price. So I might look for opportunity to sell Euro USD, GBP USD, NZD, any dollar pairs. Okay, I might sell them. JB USD, Euro USD, and Australian dollar USD. I might look for sell to this zone. Maybe just aim for 40 or 50 pips. 40 or 50 pips. So you can see last week candle, the last candle for last week closed as a doji, or you call it an angry man because it has a small body. It has a small body, so it's an angry man, you see. So that could also be the reason for the sell. So there's a high probability for price to drop to this. I might take a sell tomorrow. I might take a sell tomorrow on GBP USD, Euro USD. I might take a sell. Okay, I might take a sell. But before I sell tomorrow, you see this gap they've created here. Before I sell, you see they've created this gap here, this opening gap for the week. I want them to pull price back up here. The bearish reversal pattern forms after this gap gets filled. Okay, after this zone here gets filled. I don't want to use this high now because this candle I have not closed. Okay, if this candle closes, that's when I'll say, okay, this is a favorable gap, but it has not closed. So I'm going to work with this support tone resistance, right? Yeah, this support tone resistance and this low here. So I would love to see price pull back into this zone before going for bearish. So if a bearish reversal pattern forms at that zone, I'm going to sell. Oh, that's it. So that will be all. We spent over close to an hour in this session. So that will be all. I wish you all a wonderful night.